Welcome Tuesday morning on the floor of the New York Stock Exchange. I'm here with Mark Otto, designated market maker for Night at Capital Americas. Mark, welcome back.
Thanks for having me back.
So Mark, we are going down today. Yesterday we had a stellar day. The S&P 500 not only reached a new record, a new high, but we are very close to 1600. But today we are a little bit behind. A lot of news, a lot of numbers from the companies.
Yeah, we're seeing, yesterday we sort of took momentum off of what was going on out of Europe. So news came out that Italy was forming a government, which is positive. Sentiment is that the central banks around the world are going to backstop their economy. So the market actually propelled even higher after the European markets closed yesterday. So we're giving some of that back. News again out of Europe, 12.1% Eurozone unemployment. So back down we go. The market's been very skittish and it's moving off of news. It's sort of picking and choosing what type of macro data it's going to actually react to. So it's very interesting.
Even though those micro data are actually making a bigger argument for the possibility of the ECB of intervention this week, a lot of people now are basically discounting a tax cut rate.
Yeah, coming into this week, going in on Monday, I believe it was Reuters reported that they had 71 analysts that were projecting, and 41 of them were projecting a cut of 25 basis points from 75 to 50. So I think that was part of yesterday's rally. However, going forward, we're going to have to see what happens.
That's why I was saying discounting, so maybe a rate cut now is already priced in the market. But we have the Federal Reserve also today starting its two-day meeting. A lot of people are saying that, yeah, it's going to be no news, but maybe no news is good news. Probably the Federal Reserve will confirm its intention to sustain the market. So now we have the Federal Reserve, the Bank of Japan, and possibly the ECB. So this rally can resume again, you think, thanks to central banks?
Well, we'll have to see. I mean, on the horizon is May. The May sway is what everyone seems to be talking about. If you sold in May over the past 3 years, so you're right. Going forward, it's going to be difficult to make that call, I think. We're in uncharted territories. We're at new high levels. However, market analysts are still continuing to say that the market's due for a pullback. There's waning momentum. There's fewer stocks creating new highs, and defensive sectors are actually leading the charge. So all those are sort of bearish tell signs for indication that we might be due for a pullback.
So you really think that it could be sell in May and go away this year too? A lot of people are saying that maybe this rally can definitely go on, but you might see like a pullback like it happened in the last 3 years for the market.
Well, it is a possibility. I mean, again, we are at uncharted territory. So if we break through, particularly the 1600 to 1604 level in the S&P futures, we may actually see a short squeeze on the upside. So, we're definitely at a pivotal point right now. I could see, both sides of the argument at this point.
So give me more technical levels. You already said 1600 and 1603 for the futures, but give me more levels for the S&P 500 you're looking at.
Well, right now we're at 1589. So on the upside, it's 1597 and then 1604 on resistance. Going down from here, it's 1578 and then 1571. If the market really takes a spill, you want to look at that 50-day moving average around 1533, 1536. That's a very bearish tell sign if we break that.
And this week, of course, is not over. It's only Tuesday. A lot of important data are coming. So we might expect some volatility from here to Friday. Friday, we have the big employment numbers.
Yeah, there's a lot of macro data aside from what's going on with the ECB or the FOMC meeting. We're going to have PMI data coming out tomorrow from the U.S. and in China. So for the U.S., we're anticipating a forecast of 50.9, China 50.7. Thursday, we move into initial jobless claims. We're looking for 345,000. I believe the window is 338 to 355. Going into Friday, change in non-farm payrolls. We're looking at 150,000. And then the unemployment rate is 7.6% forecast.
We'll see. We are ready for a lot of numbers, definitely. Thank you very much, Mark, for being with us.
Thank you.
And thank you very much for following.